All right, good evening, everybody. So, I wanted to take a second to show you all what I was looking at as far as the charts were concerned. So, all right, so earlier I showed you all the how we retraced it from the uh, the daily fib, the 61.80 daily fib, but I wanted to show you all something else. So remember we were talking about structure inside of structure, right? So what I'm gonna do, I'm gonna take this fib, I'm gonna take it off for now. We'll come back to it because I want to show you all something else. So if we go back to the hour, we're going to put another fib on. We're going to put a fib on right here using this structure. So using this swing low and then this swing high. And check it out, right? What happened? Price came down, right? And rejected at where? 61.80. See, so yet again, we have an instance where price has reversed off of our 61.80 based off of minor structure. So you may be asking, why not use this, so from here to there, for that structure? Well, the thing was, at the time, this side wasn't created yet. And then remember, from a trend perspective, you need multiple touches for it to be part of a trend. So at least with this side, we have multiple touches to validate that uptrend right there or what have you. So something to keep in mind. So remember, as far as when we talk about structure inside of structure, so now what we would look for as far as maybe a possible next trade is for price to possibly come back to that level right there. Or let's take this fib off, right? And let's see what we're working with. We're going to take this fib off right here. And we're going to put a new fib on based off of this swing high, because this is developed, and we got this swing low. Bam. So we put that on right there. See that? Now what we're looking for, right, is for price to possibly go up to here and possibly do a retracement back to the downside. But again, always we look for the confirmations on our lower time frames. But one of the things, so if you think about it, yet again though, so typically we don't look to put trades in off of the 23, the 38, and the 50. So we look to put trades in based off of retracements off of our 61 and our 78s. Look, if it retraces and it keeps dropping down, fine. You know, we live to trade another day. Because here's what you don't want to happen. You put a trade in, you know, a retracement trade, and then it turns back on you, right? So you don't want that to happen. These levels, 23, 38, 50, they're known to break pretty easily. So you don't want to necessarily count on those for trades necessarily. So you know, be careful when you look at the retracements at these levels. You know, if you miss that trade, you know, oh well. You know, plenty of opportunities to get in a good, lucrative and profitable trade. So again, we only look to trade the 61.8 and the 78 area retracement zones or what have you. But something to note, right? So obviously, looking at the 1 hour chart, price is reacting to this 23.60. So, you know, something to consider. So let's look at the 15-minute chart. So basically what we're seeing on the 15-minute chart is that price has not broken this area right here. So this zone. So this zone seems to be holding up pretty good, which means price may be looking to continue downward for however long. This looks to be a pretty strong area, this zero area on the fib that we placed. So this looks to be a pretty strong area for right now. So look for price to possibly bounce off of that as we've had multiple touches at this area before. So just a couple of things to look at for some possible trade setups for tomorrow or going into our Friday trading session if you're looking at GJ. But again, we're always looking for how price is reacting at these levels before we put a trade in, and we want to see that confirmation with the multiple touches, and then the actual. So like, let's say if I'm looking to put a trade in where it is right now, we're looking at the 15-minute chart. If I was looking to put a trade into the upside, what I would wait for is I would wait for price to actually close above these touches right here, right? So that's when I would look to possibly put a trade in to go to the upside, so a buy trade. So if I was looking to put a buy trade, if I was bullish, I would wait for price to actually close above these candles. Not these wicks. I don't want it to touch. I want to actually see a closed candle on the 15-minute chart, above these levels right here before I be convinced that we're continuing with the current trend at this level. And again, we see those touches on the hour chart. We see where it's rejected a couple times the last couple hours. So we don't really know exactly what it wants to do right now, but not looking to really get in the market right now anyway. But just some things to consider before getting into a trade. Again, I'm not looking to just get in any old trade. I'm looking for a trade that's going to be lucrative and make me enough money that I'm comfortable with. So we see that retracement right there on that candle, this new candle that's forming, and that's pretty much what's happening. It's continue to retrace and react at this level. So again, if I'm looking for a trade to the downside, I want to see it break this little range that it's been trading in right here for a little bit, this tiny little range area. I want to see it break one way or another before I would even consider getting into a trade. And again, I'm not getting into a trade unless it's going to be worth my money. All right, so that's all I wanted to bring to you all for the time being. We will chat another time.